Good morning, traders. Welcome to today's trade ideas on Signal. So, without wasting time, we're just going to review our previous trades and see where we are in the markets and try to understand what we can do and how we can capitalize on what is going on currently in the market. Okay. So, without wasting time, this is our daily range that we've talked about in our previous episodes. I'll talk about all these shifts that we have here. And yeah, the way we have this TC, and we are now anticipating that okay, we will continue to move downward in the market, so that the price of the market is now trying to go. But before we get to our destination, we'll branch many places, and that is what is happening currently in the market. So with what we are facing currently, we have this massive gap this morning that we woke up to. So we have this, we're going to just analyze, these are daily range anyway, this particular level. And if you've been following me from the past, I talked about how I'm anticipating some kind of movement from this particular level here. I talked about how we are expecting some kind of uh, reaction from all these levels here. So we have this reaction anyway, but we picked it to be 1 to 5 initially when we started, when we picked this level. And we have the reaction, even though these are major lower high, which we are terming strong high. We are not expecting it to get broken with the kind of wicks that we throw here. But when we started throwing wicks here, I know something is definitely going to happen. So since we have this bigger level, bigger retracements at this particular leg here, so I know at least maybe something is particularly going to happen in the market. So now we have this movement, and since we have this movement, we have this retracement back into the 50% of this particular range, and it seems like it want to go up. But what do we see? We woke up this morning to this massive gap downward, which is an indication that market is ready to kind of move in a direction of downtrend. So, but just in case this particular level here, the broke of structure that we have here, and the kind of retracement that we have at this particular level, known over time that okay, from the nature of Euro USD, once we have something like this, and we didn't have a proper mitigation of the level above here, like like that in the market, then I know something like this is going to happen in the sense that we're going to come back into the level to give us a proper mitigation of the levels that we have here. And that's what we did have here. Even though on Friday, I was with the kind of leg that we print here, I was expecting that maybe, okay, market is ready to change gear and move in an upward direction because of the imbalances that we have at this level. But market leads we follow, and that's exactly what happened there. Exactly what's happening. So, and what do we have to do in the market other than just to wait and try to see what is going to do. Personally, now I'm not going to be taking any trades, even though I started this level this morning and kind of thinking maybe 1 to 3 should go with it, and but nonetheless, it's better we just what is it called? We just continue to observe what is going to happen in the market, even though it has bring 1 to 3. And the point on that is the fact that okay, for now, with the kind of reaction we are having in the market, we're going to be shifting our take profits to 1 to 3 instead of one to our usual 1 to 5 in the market because of the kind of reaction we are having up and down. Because a lot of trades that we have here, many of them were taken out even though after they've hit 1 to 3 take profit. But because we are anticipating 1 to 5, many of them has been taken out of the market. This particular one here, it's 1 to 3, but it was taken out. Why? Because we are anticipating 1 to 5 and market reverse on us and takes it out. So Henceforth, we just stick to 1 to 3 because of all the reload that we're going to be having along the way. So instead of waiting for just 1 to 5, then we can be re-entering the market if our first 1 to 3 hits, then so that at least we won't be wasting our time in the market because of the nature of the market these days. Because a lot of things are happening here and there. Even though all these things that we are experiencing here is due to the what is it called, the war going on between Iran and Israel. And America has entered into the scene again. And I believe that's the reason why we are having all these gaps in the market. And if something like this is happening, we just have to change. And that's where proper risk management comes in. Let's assume the reaction we are having here, is enough to blow our account if care is not taken. So if we didn't have proper risk reward management and risk management in the market, a lot of things would have happened. So what we're going to basically do uh is to erase all annotation and try to see what we can capitalize on from weekly. Let's start from weekly or monthly and try to see what we're going to. Okay, we're at this level on monthly and the liquidity above this high has been taken. And whatever makes market to close above this level, then we know that we are anticipating higher prices in the market. So we have 7 days starting as left for the monthly candle to close. Let's go to weekly and see ourselves. We started trading from weekly at this particular level. And we talked about in this internal structure to be what is going to send price into the ice. And we've been experiencing that in the market. So we have this level. I talked about this particular leg. If you miss the entry of this level, then I'm hoping that, okay, we're going to have another re-entry from this particular leg into the ice. So that has been my what is it called? My anticipation in Euro USD that we're going to come back to this level, have some kind of retracement back into it before we continue into the ice, because personally I still believe that, okay, we're still going higher. So here automatically becomes the leg we are anticipating to close below if at all if we're going to continue to move downward in the market. So this particular leg, whatever make us to close below this low and have a market structure shift within it, then automatically we know that we are where the Euro USD is going to tank. So now here becomes our strong low. Let's pick our range again. Let's move this one to the side. So, anticipation in the market, and here automatically becomes our strong low in the market. Major strong low. Here still remain our weak high until those levels are closed below. So here becomes our weak high, and you know. So these are dealing range in the market. Still remain our dealing range, whatever. So that's our dealing range. And you can see the price reaction around that level. So we are still within the range. We're going to try and see what we can capitalize on. We have this shift, we have this break below. There on 4 hour time frame, these are anticipation and our dealing range. So whatever happens within this leg is what's going to determine where we are going. So whatever happens within these 2 legs is what is going to determine where we are going in the market. So personally, this particular legs is what is the determinant of what I'm going to continue to trade, because I'm no longer ready to get engaged in these structures that we are creating until we either close above, close below this level. Then I'll begin to look for either buy or sell in the market. So these are anticipation in the market. Even though if we see within 1 hour, we can see a proper, very massive something within the something. And we have this internal structure that can be easily capitalized on. And this leg here, this particular level here, is a massive PDA in the market. So if you want to risk it, you can kind of enter into the market, and this can serve as a very pure order block in the market. So this internal structure can give us 1 to 3 if you want to engage. I believe that's okay. Can engage from this particular leg here and stop it there. So that's 11.5 pips. So that will give us 55, 57.5, 575. So, okay, still calculating based on 1 to 5. We are looking for 1 to 3, which is 33 and 35, 35, 5, 355. So that should give us 345. So if you want to risk it in the market, this can give us something, if at all, because personally I was expecting that we're going to have some kind of movement around this area. But that's if you want to engage. But if you don't want to engage, can just can just weather it out. So that will be all at least for today. But before we can begin to take any major buy or sell in the market, I'm expecting this high and this low to be broken and closed either above or below. But if at all you cannot sit on your hand, this is a very good trade that I believe can materialize somehow in the market. So, okay, let's keep it that way. And thank you very much. Enjoy the rest of your day and have a profitable week ahead. So don't forget, we're anticipating without close above or below this particular level in the market. So whatever happens within it determines what we're going to do eventually. Thank you.